That's 15 seconds. Guidance is internal.
This is essentially a dream business, right?
12, 11, 10.
When Musk tells you this is the deal of a generation,
You can frame it as democratization all you want.
maybe it is.
The market is paying for the story, not the spreadsheet.
Or maybe it's all just one big corporate lie.
We're talking rockets that launch satellites, then satellites that deliver bandwidth, and then bandwidth that powers the artificial intelligence models.
The people being handed the most rope in this IPO aren't institutions.
It had a massive valuation on paper, very geopolitically charged,
And right now, the price assumes more revenue than Nike,
no real revenue base,
Morgan Stanley,
no distribution,
Goldman Sachs.
surrounded in legal overhangs.
Will SpaceX break the pattern? What do you tell the average retail investor today?
I would recommend everybody
Hello, and welcome to another episode of Invezz Zero Sum, the show where we cut through the noise on markets, money, and geopolitics and try to work out who's actually winning. My name is Harsh, lead news editor at Invezz, still coming to you from my makeshift studio at home in India. Next episode, though, I hope to be back in the UK, all set to enjoy the 5 seconds of British summer. Before we get into it, a huge thank you to everyone who watched or listened. It is genuinely great to hear all the positive comments, and it is what keeps us going. Right, let's get into it. When was the last time you heard about a company going public and thought, this is going to change how I think about money forever? I mean, a company that launches rockets, beams internet into space, owns an AI chatbot, is sitting on Bitcoin, and this is genuinely in the filing, wants to build data centers in orbit because Earth has run out of space. That company is SpaceX and is coming to the stock market. Saudi Aramco, the oil giant that basically bankrolls an entire kingdom, raised just under $30 billion when it went public. That was the biggest IPO in history. SpaceX wants to raise $75 billion in one go on the Nasdaq this summer. The valuation they are targeting, you might ask? $1.75 trillion. To put that in plain English, that's more than the entire GDP of Australia. It's more than every publicly traded company in India combined. And they filed the paperwork on April the 1st. Sounds like April Fool, but yeah, it is not. The actual business, making actual money, is a satellite broadband service that 11 million people pay for every month. It's called Starlink, which is honestly quite brilliant. But it is also about to carry the valuation of a company that nearly lost $5 billion last year. So the question we are asking today is quite simple. Is this the trade of a generation, or the most expensive hype machine ever assembled and packaged as a stock? To help me make sense of all of this, or any of this for that matter, I have brought back somebody who has made it a habit of sitting across me and telling me things that I don't really want to hear about stocks. Wajeeh Khan is a stock market analyst at Invezz. Last time he was here, we were discussing another wild subject involving Mr. Musk, his mega courtroom battle with OpenAI boss Sam Altman. Wajeeh, I feel like this is your natural habitat now.
if there is an Elon Musk chaos going on and markets doing numbers they probably shouldn't, I'm usually somewhere in the middle of it. So yeah, very on brand for me.
Which is why we are bringing you here for the second time in 3 episodes, right? Anyway, before we get into today's madness, give us an update on what is happening with Elon Musk and Sam Altman. I hear there was some judgment in it, right?
At this point, I think, Hirsch, whatever had to happen in the courtroom has already have. I mean, the jury has already ruled that Musk simply waited too long to bring these claims, and the judge agreed. So the case has been dismissed entirely. So Musk didn't get any of it, not the $130 billion, not Altman removed, not the return to non-profit status, nothing at all. This whole legal drama sort of ended with I would call it a procedural knockout, not a philosophical one.
It was a big bang to start with, and it fizzled out, right? I mean, I'm glad to see the jury had common sense. SpaceX, for anyone who does not know, has been private for 23 years. Musk has actively resisted going public. Because I think he probably watched what Wall Street did to Tesla, the short sellers, the quarterly earnings circus, the tweets that became SEC problems. So why now? What has actually changed? Why does Musk want to go public with SpaceX?
The simplest answer to that question is still rests with Mr. Elon Musk. I mean, who knows what goes in his head, right? If I knew, I would probably have been a billionaire.
Who knows? You could be one. I mean, you might just be hiding your money somewhere.
As far as I'm concerned, I think I can think of more than a few reasons why this year would be ideal for SpaceX to go into the public markets. Look, for 23 years, Musk could afford to keep this thing private because it was heavily funded and financed by a tight circle of sovereign wealth funds, right? We're talking like venture capitalists and a handful of mega checks from the likes of Fidelity, right? But over the past few years, if you think about it, Starlink has actually become a global utility. As you mentioned in the intro yourself, it's already serving what, like 11 million people worldwide?
Yeah, including my manager.
Right? Yeah, including your manager. 11 million people worldwide. It's in defense contracts. It's even being written in NATO documents. So that's one part of it. And then, of course, I think SpaceX, the core SpaceX business, I think it has evolved from launching rockets to building this huge Starship program that's actually very, very capital intensive. So that's reason two. And then, of course, you can't forget about the recent merger with XAI, right? I think that was the tell for me. Folding XAI into SpaceX wasn't just a corporate sort of a reshuffle, you know? It was our beloved billionaire signaling to the market that he wants to package everything into one vertically integrated powerhouse.
Worth flagging, though, that the merger happened really fast, and in fact, suspiciously fast, some might say.
This was actually the tell that Elon Musk wants to package everything from rockets to satellites to compute to artificial intelligence into one strong vertically integrated story. And why? I mean, let's face it, Wall Street loves it, the whole platform narrative. Wall Street loves that sort of narrative. At least now it loves that narrative. So what this merger essentially did was that it evolved SpaceX further from a space company into an AI plus infrastructure play. So I think when you get that big, you simply can't run the business like a private moonshot anymore. I mean, you need, at this scale, you need permanent capital. You can't rely entirely on episodic fundraising rounds. So I think an amalgamation of these factors is why Musk is choosing to take SpaceX public this year.
But walk me through this deal to begin with. I mean, the XAI deal, because on paper, it looks very simple. And in practice, it's probably one of the strangest corporate maneuvers there are, right? Musk owns SpaceX, he owns XAI, he merged them. The combined valuation came out at 1.25 trillion, of which, now here's the fun bit, right? SpaceX is a trillion and XAI is just what, 250 billion?
We're talking rockets that launch satellites, then satellites that deliver bandwidth, and then bandwidth that powers the artificial intelligence models. That's a very real, straightforward strategy, so to speak. But I think on the other hand, he's also very aware that XAI on its own would have never been able to justify a $250 billion valuation in the public markets. So there I absolutely agree with you that folding XAI into SpaceX essentially enabled him to sort of smuggle some of that premium into the IPO, you know? So all in all, my view on this whole situation is that it's the classic Elon Musk. He's blending ambition with financial architecture.
That is as diplomatic as it gets. So yeah, I'll just ask you the question once again in a slightly more direct manner. Did XAI need SpaceX or did SpaceX need XAI's numbers?
Right. So if I had to give it to you straight, I would definitely say that XAI needed a SpaceX far more than a SpaceX needed XAI's number. And I think the reason, again, is quite straightforward. Look, XAI, without a SpaceX, it had a massive valuation on paper, right? Yet, if you think about it, it had no real revenue base, it had no distribution, and it was surrounded in legal overhangs. And I'm not just talking about this recent battle with OpenAI. I am actually more referencing to this whole situation with Grok and the explicit images and that sort of thing, right? On the other hand, if you think about it, SpaceX, even without XAI, it had $1 trillion valuation in the private markets, and it had a very real business in the form of a Starlink. So what this merger essentially did, if I put it simply, it gave XAI a home and it gave SpaceX an AI premium, right? So what Musk did was essentially he wrapped a speculative AI asset into a cash generating infrastructure company, and suddenly the whole package looked like IPO ready.
Fair enough. And while we are talking about the IPO math, I would just sort of also like to talk a bit about the numbers, because this is where I feel it kind of gets genuinely strange. Reuters reviewed the S1 and reported $18.7 billion in consolidated 2025 revenue. Fine, that's a strong number, great. But it also reported $4.9 billion net loss, because XAI alone posted $6.4 billion operating loss and consumed 61% of the combined entity's capex. Meanwhile, earlier in the year, this is just absolutely mind-boggling. Before the merger, there were reports that of roughly $8 billion in profit on 15 to 16 billion in revenue.
Yeah, so a simple answer to that, Harsh, would be with a pinch of salt. That's how you're going to have to read it.
Well, I'm not really looking forward to what you're going to say after this, but yeah, go on.
If you look at the headline numbers, the $75 billion raise, the $1.75 trillion valuation, the $15 to $16 billion in revenue for SpaceX without the XAI entity, and nearly half of that actually trickling down to the bottom line. This is essentially a dream business, right?
It almost sounds to me like the merger made the company less valuable on paper and more valuable on the pitch deck. Is it something like that?
You can actually put it that way, and I'll tell you why. Look, that 61% capex number that you mentioned, I think that is of particular importance, because what it essentially means is that 61 cents on every dollar that this company is spending is not even going into the cash generating machine, aka the Starlink business, right?
I would, at this point, want to talk about the business that actually makes money, because we have been talking all money. And funnily enough, the only company that is making real money is Starlink, right? And is carrying an enormous amount of weight in all of this. $11.4 billion in revenue in 2025, 63% EBITDA margin, 10 million subscribers, more than 10 million, actually 11 million. I think we just mentioned 11 million across, 160 countries or something. That is by any measure an extraordinary infrastructure business. Now, if Starlink were its own listing, no rockets, no Grok, no Mars, what would that actually be worth? And does bundling everything else in with it make the IPO more attractive, or just makes it more complicated?
The complication, I believe, is everything wrapped around it. Bundling Starlink with rockets, with AI, with orbital data centers. It gives you a much bigger narrative, but on the other hand, it also sort of clouds the financials as well.
So what you're essentially saying is that the thing making money is being subsidized, in terms of investor attention, of course, by the things that are losing it, right?
Absolutely.
Well, which brings us to the number they have put on the whole thing, because it's quite a number, right? At $1.7 trillion valuation, SpaceX lists at roughly 7.5 times Alibaba's market cap on the first day of trading in, I think, more than a decade ago in 2014, which was itself the largest IPO in the history at that point of time. The raise alone, 75 billion, is 3 times of what Saudi Aramco raised in 2019, but still holds the record, by the way. To justify that valuation, tell me, Wajeeh, on fundamentals, analysts say SpaceX needs to hit, oh my goodness, I don't even know how to go there. It needs to hit more than 150 billion in annual revenue by 2030.
The only model where it pencils out, Harsh, is a moonshot model. Look, the current valuation or the valuation that essentially SpaceX is seeking via the IPO, it makes some highly aggressive assumptions. Like Starlink becomes a global telecom monopoly, the Starship becomes the backbone of the launch market, and the company starts selling compute and the AI services and maybe even orbital data center capacity. I mean, who knows?
Elon wants to go to Mars is not really a DCF model, right?
Absolutely. So it might be a very sophisticated, very geopolitically charged, very AI infused vibes valuation, but vibes nonetheless. I do believe that the market is essentially paying for the story, not really the spreadsheet.
I remember that SpaceX investors may end up on the hook for that exposure anyway. And because Starlink operates in all those markets and regulators can put access to the whole company, if one part of the company is misbehaving on hold, how much of this 1.75 trillion is priced in for that risk? Because that risk is quite real. And these countries are really going after Grok and the XAI's models, right?
Right. So my simple answer to that, Harsh, would be absolutely none. I think when you're seeking $1.75 trillion valuation, it's fair to assume that we are dealing with price for perfection.
The IPO includes a dual class share structure, which I would request you to explain in your answer, but I would just give my understanding, which is that Musk keeps voting control, which in practice means that if you buy SpaceX on the Nasdaq this summer, you're basically a passenger. You own the ticket. You do not fly the plane.
I think, again, both Musk premium and the Musk discount are very real. I mean, the upside is absolutely enormous. After all, Elon Musk is the entire reason we have a SpaceX. He's the reason this company can seek to raise $75 billion at once. But I do believe so is the volatility around governance and the so-called Musk discount.
I mean, to be fair to the man, he did found the company and lands rockets on drone ships. And there's an argument for giving the man some rope. But here's the thing, the people being handed the most rope in this IPO aren't institutions, they're retail. Because SpaceX is allocating 30% of IPO shares to retail investors.
You can frame it as democratization all you want, but I'm convinced that you don't allocate 30% to retail unless you're trying to solve a problem.
Well, it is. I mean, I kind of feel it's just a celebrity selling something, a beauty product, and everybody probably going for it. Anyway, last question. And I mean, maybe not the last question, but I really want you to be honest here because this is the part which people actually have come for on this show. Someone who is listening to this right now and is probably planning to open their brokerage app on the listing day, they're going to see SpaceX on Nasdaq. They're going to feel the pull. I am feeling the pull, even though I'm not the biggest fan of any of the people involved in the company or the company itself. What do you tell to that person? Imagine I am your average retail investor, which I am. I'm not an institution. Tell me, what should I do? Because, there are experts who are going to tell you 500 things. They're going to tell you that this is the balance sheet, this is the number, this is the S1, blah, blah, blah. But how does an average investor look at it? I understand there are companies which have already had big IPOs because I'll just give some context here. Some of the biggest IPOs in the world, Saudi Aramco, in fact, the biggest that we have discussed, is down since listing, right? In fact, the biggest names that come to my mind are Alibaba, NTT, Visa. And Visa is actually the only one that beat the market. Rest all are probably still not doing very well. So does history say wait, or will SpaceX break the pattern? What do you tell the average retail investor today?
IPOs almost never reward the people who rush in on day one, right? They reward the patient. They reward the investors who wait for the story to settle, who wait for the financials to normalize, and essentially who wait for the hype to cool down. So I absolutely do believe that SpaceX could emerge the one that breaks that pattern, but you can't argue against the fact that it's still subject to the same forces, right? like price discovery, lockup expiries, early investor selling, and maybe even market realizing that the S1 is actually more complicated than the narrative. So I would just recommend everybody to understand that even great companies, they can be terrible day one investments.
And what would you be doing on day one? Would you be sitting with your phone or your big Bloomberg terminal?
I would definitely be following everything, but I won't confuse a great company with a great entry point. I am definitely going to let the dust settle because let's face it, the business isn't going anywhere and neither is the opportunity. So it wouldn't hurt to wait. Let the market tell you the real price before you put your money into SpaceX.
It is genuinely one of the most impressive companies SpaceX ever built. The rockets are real, Starlink is real and profitable. The launch market dominance is real. None of that is theater. But investing isn't a referendum on whether the company is impressive. It is a bet on whether the price is right. And right now, the price being asked assumes that by 2030, SpaceX is generating more revenue than Nike, Goldman Sachs, and Morgan Stanley put together, while also successfully running an AI division that lost $6 billion last year, navigating regulatory investigations across 3 continents. I don't know, maybe even colonizing Mars on the side. Saudi Aramco, which we have mentioned earlier on the pod, raised the biggest IPO in history in 2019, and it is still below listing price. So when Musk files an IPO and tells you that this is the deal of a generation, maybe it is, or maybe it's all just one big corporate lie, which is being told to us time and time again. Wajeeh, now let's get into the final round of the podcast, which, as you know, because you have been here once, it is our quick fire 60-second round where we ask you, what are you bullish on, what are you bearish on, and what is your wildcard?
My winner this week is actually going to be the US Treasury Department. Because this IPO doesn't just mint shareholder wealth, it rewires the US industrial base. I mean, Starlink becomes a de facto national asset, Treasury gains leverage over a company it previously had limited visibility into it, and I think this IPO overall strengthens the US capital markets narrative. The biggest IPO in history happening in New York, not Shanghai, not Riyadh, not anywhere else. It's a soft win. And in terms of bearish, I would say the geo-satellite incumbents like Viasat and SES, Starlink, I believe if the scale was already existential for them, and this public SpaceX is going to make that terminal.
And what is your wildcard?
The real wildcard is AWS, because if regulators crack down on XAI inside SpaceX, hyperscale compute demand shifts elsewhere, and if Starlink becomes the world's biggest edge network, AWS becomes a natural cloud partner. That pairing, I believe, is far more likely than people think. And then finally, even if SpaceX's valuation wobbles, I believe Amazon becomes a flight to safety in the space AI infrastructure trade.
Wajeeh, thank you so much, as always, for helping us make sense of the mad numbers that we live around. For anyone watching, listening to us, please show us some love. This is Zero Sum. We'll see you next week. Bye-bye.